Welcome to the deep dive. Today, we're doing something a bit different. We're not just looking at a financial strategy itself. We're actually analyzing the communication strategy behind it.
Exactly. We're looking at the blueprint for explaining one of the most, maybe the most successful bits of advice for new investors.
Right? That idea of turning small, consistent actions into, well, potentially massive wealth.
Yeah, we have these source docs that detail how to explain compound interest effectively. And our mission really is to dissect the structure they built around this one very digestible concept, how just $5 a day can be framed as a way to get rich.
It's about the rhetoric, the psychology.
And the math needed to actually back up that huge claim.
Okay, let's unpack this then. The title this strategy demands is pretty bold. How $5 a day can make you rich. I mean, that immediately sets off alarm bells, right? Disbelief.
Oh, absolutely.
Hmm.
Especially for someone new to investing. It sounds almost like a scam.
So to get past that, the sources say you need a powerful curiosity gap hook. Why start there? Why is that hook so vital for something like long-term investing, which is inherently slow?
Well, think about it. Long-term investing's biggest enemy is impatience, right? Wanting results now.
Yeah, instant gratification.
Exactly. People struggle to picture rewards that are decades away. So the curiosity gap, it's designed to bridge that mental distance.
Oh, so what is the gap here?
The gap is simply the massive difference between the input $5, super relatable, the cost of fancy coffee, and the output, the big promise, make you rich.
Ah, okay.
Huh.
Small, easy input, huge aspirational output.
Precisely. And this framing, it taps right into behavioral economics from the get-go. What's really fascinating, I think, is that the blueprint specifically rejects talking about bigger sums up front.
Like they didn't say $150 a month. Or what, $1,800 a year?
Right. Even though the math is identical, they deliberately chose the daily amount.
Why? Why avoid the monthly sum if it adds up the same? Is it just marketing?
It's more than just marketing. It's psychology. A monthly figure, like $150, makes you stop and think about your budget. You know, where does that come from? It introduces friction, decision fatigue. But $5 daily, that feels almost trivial, low friction. It seems manageable for a really broad U.S. audience who are new to investing, which is the target.
So it sneaks past the budget defenses.
Sort of, yeah. It reframes a potentially daunting financial commitment into a small, repeatable, almost throwaway daily habit. It's engineered for action, not procrastination. Low cost, high frequency.
Okay, so that accessibility, that low friction, that's the hook. But then, like we said, comes the skepticism. You hear $5 a day can make you rich, and your brain just goes, nope, doesn't add up.
Linear thinking, yeah.
So the strategy must be designed, as the sources say, to break disbelief. But here's a question. Does focusing only on $5 a day maybe undersell the real effort involved? Is it maybe a bit too much marketing gloss?
That's a fair point. If it were only marketing, it would fall flat. Because you're right, the claim is kind of outrageous if you only think linearly.
Right, $5 a day for 20 years.
Yeah.
What the, like $36,000, $37,000?
Around $36,500, yeah. Which is, you know, it's not nothing, but it's hardly rich making on its own.
So what bridges that gap? What's the actual mechanism that lets the strategy deliver on the promise and break that disbelief?
It hinges entirely, on immediately introducing and explaining the one force that can bridge that gap.
Compound interest.
The power of compound interest, exactly. It's
Right.
the only thing, the exponential engine, that can turn that small, steady input into that massive, curved output over time.
So without explaining compounding clearly,
The whole thing just becomes a flimsy motivational slogan. It loses all credibility.
which is why the blueprint insists on using real math examples, right?
Yeah.
You have to anchor the abstract idea in concrete numbers.
Absolutely. You have to show the magic, but show it with math. Show the difference it makes.
Okay, let's do that. Use the $5 a day example. We said under the mattress, it's about $36,500 over 20 years. What does the compounded version look like? Let's assume, I don't know, a reasonable average return, say 8%.
Okay, so 8%. If the communicator does this right, this is the moment that shifts perception. That same $36,500 total investment put in as $5 a day for 20 years at an average 8% return. Well, it could potentially grow to over $100,000.
Wow, okay. That's a significant difference. Almost triple the invested amount.
And that's just 20 years. If you stretch the timeline out, which is really the point of this advice, think 30 or 40 years, that compounding effect just goes wild. It accelerates dramatically.
Potentially into the hundreds of thousands.
Easily. Hundreds of thousands, maybe even 500,000 or more, depending on the exact time and returns. The math itself becomes the proof. It shows the $5 is just the seed, but time and compounding are the the fertilizer and the sunshine, let's say.
That visual acceleration, seeing your earnings start to earn more than your actual contributions.
That's what breaks the disbelief, because it defies that simple linear addition most people default to.
Got it. So the math is crucial for credibility. But then there's the delivery. The sources specify this tone. Educational but inspiring. How do you balance those two, especially when teaching finance, which can be dry?
It's really about appealing to both the head and the heart. The educational part targets the logic.
Defining terms, explaining how investments work.
Exactly. Explaining compounding, maybe mentioning diversification, setting realistic expectations about risk and volatility. That builds trust, establishes credibility.
But facts alone don't motivate action.
Right. If it's just a dry lecture, people might understand it intellectually, but they won't necessarily do anything. That's where the inspiring part comes in.
Connecting it to goals.
Yeah, connecting the mechanics, the saving, the investing to aspirational outcomes. Future security, freedom, less financial stress, achieving dreams, whatever resonates. It fuels the discipline needed for that long haul.
So education provides the how, inspiration provides the why.
Perfectly put. You're teaching the roadmap, but constantly reminding them of the amazing destination to keep them motivated on the journey.
And this is where it gets really interesting, I think. The goal isn't just to teach compound interest. The real aim of this whole communication strategy is behavior change, isn't it?
Oh, absolutely.
By constantly hammering that $5 a day, it reframes investing. It makes it feel less like this huge, complex financial maneuver.
And more like a simple, everyday habit, like deciding not to buy that latte or snack and putting the money aside instead. It's about redirecting a small, existing spending habit.
Normalizing the behavior.
Exactly. The strategy deliberately uses analogy and a clear, relatable tone. It avoids jargon that scares people off. The message is, you don't need an MBA to start, you just need $5 and the willingness to be consistent.
Which brings us to the final piece of the puzzle. The sources demand a motivational call to action at the end. Now, if the math has already broken the disbelief and the educational part explained the how, why do you still need that motivational push? Shouldn't the facts be enough by then?
It's a great question. Logically, maybe they should be. But we're not purely logical creatures, are we?
Not usually, no.
Even when someone grasps the power of compounding, that initial step into the investing world can feel huge. Intimidating. What if I pick the wrong thing? What if I lose money?
Analysis paralysis. Fear of making a mistake.
Precisely. Inertia is powerful. Fear is powerful. The call to action is that final nudge. It's designed to convert that passive understanding, okay, I get it, into active, applied behavior. Okay, I'm actually going to do it.
How does it do that?
Usually by linking their future goals, security, freedom directly to taking action today. It stresses that the most crucial step isn't becoming an expert overnight.
It's just starting.
It's just starting the habit, even with just $5.
So for that novice investor, the target of this whole blueprint, if they walk away with just one thing, what should it be? What's the ultimate takeaway they want embedded?
I think it's this. The real power isn't in the dollar amount, the $5. That's just the key to unlock the door. The real power comes from leveraging time.
Time is the magic ingredient.
Time is the amplifier. So the most important decision you make isn't what to invest in initially, it's the decision to simply start. The $5 is designed purely to make that starting line feel incredibly easy to cross, overcome that friction.
Okay, let's try and summarize the key insights from this deep dive then. The effectiveness of this $5 a day advice isn't just the math of compound interest, powerful as it is. It's actually a carefully constructed communication strategy.
Yeah, it's multi-layered.
It uses an incredibly accessible entry point, that relatable $5 as a hook. Then it tackles skepticism head-on with clear, quantified math examples.
Right, showing that exponential growth.
And it delivers all this using a specific tone, that blend of education and inspiration, aimed squarely at motivating a novice audience to overcome inertia and actually begin.
Exactly. We weren't just digging into finance, we were digging into persuasive communication. How you frame complex ideas matters immensely. The genius here is in that framing, the structure, the sequence.
Which leaves us with a final thought for you, the listener. Building on this core idea, if the secret to building wealth can be starting small and leveraging time through compounding, what's one other seemingly small daily action you could take? Something outside of finance.
Interesting angle.
Yeah, think about it. What small, consistent investment of time or effort, maybe in a relationship, learning a skill, focusing on your health, could compound over years into massive long-term results in your life? What could be your non-financial $5 habit?
That's a powerful question to reflect on.
Something to think about. We'll catch you on the next deep dive.